Audio, video, all clear, visible. Okay. ठीक है. Okay, so let's start. This is chapter number 4. So those who are not aware about what we are doing, this is chapter number 4. I hope you have seen last 3 chapters. Economic survey is a very important document for all the examination, whether you are preparing for UPSC or any bank related exam. Economic survey terms, data, concepts, definition, all continuously being asked in the examination. Okay, so here you need to understand the most important thing, that is we have discussed fiscal, monetary, and the intro. And if you want this PPT, as I told you, you can text on this number, the number given on the screen. Okay, apart from that, I told you that those who will complete the whole series, in between I will give you a summary of this economic survey. The summary is currently available, so you can ask on this number where you will be getting the summary. After getting the summary and full economic survey lectures, I'm making a revisionary PDF for all of you. That revisionary PDF will help you in understanding and revising all the important concepts in economic survey. Then 1 page important data as well that I'm preparing for you. Okay, so those who are serious students, those who are coming daily live, I will tell you how to get it once we will end all the lectures. So I can tell anytime. It's not like you are attending the 16th lecture, that is chapter number 16, and you will get the solution. No. Everything is for the reward of the effort and the commitment that you will make. Okay. So here on the same lines, if it is clear, just write clear in the chat box, because economic survey is non-negotiable. Is non-negotiable when it comes to any competitive examination. We have seen that this is the report card of the government's performance in the Indian economy in the year 2025-26. So as a report card, it's all the summary. Okay, so you'll be getting data, concepts, definition, examples, and other areas, and you will better understand economics. So you will be good at economics and understanding the newspaper as well. So those who are not reading the newspaper, they will still able to understand economics related news in the next 6 months where is your examination. Okay, so the most important thing you need to keep in mind is this chapter number 4. Now, chapter number 4 is about external sector, and you know the 2025, the year 2025 was very vulnerable for the external sector. Okay, we have seen the election of Trump in the month of January, although that's not the part of economic survey, but we have seen since April to December 2025, the survey took the data of April to December, and January to March of 2025, they have taken the revised data. Okay, so external sector, the name is playing the long game. Okay, so when there's a fever of T20 in India, Indian economy is playing test match. Okay, I hope you can understand. When other countries, especially like America, when other countries are playing short-term games, India should focus on and relying on playing the long game. This is very, very, very important. Why I am saying this? Because when somebody is short-sighted, you have to play along with a long vision. The reason is simple. We have seen very hostile US presidents in the past as well. Okay, I'm repeating again, India has seen a lot of hostile US president in the past. For this, you will just have to pass the 3 years into our making. Okay. But let me tell you, these 3 years can also be beneficial, like our Indian bureaucrats, Indian politicians, and our ministers. They are doing the fantastic job in stabilizing our Indian economy. Here, the most important thing that you need to keep in mind that fiscal policy and monetary policy should go hand in hand. As I told you in the chapter number 3 and in the chapter number 2 about monetary and fiscal respectively, now in this chapter we will connect those two chapters as well with the external sector. It means from short-term balances, now India is looking for strategic position. Strategic position where India can keep its own interest intact, plus India can also become a global player. Okay, so here we'll see how our external sector looks like in this volatile tariff related protectionism going on in the economy. Starting with the introduction, this is very important introduction because that will give you the foundation of this chapter. Okay, currently I have 55 slides or approximately in this lecture. In these 55 slides, the most important thing you need to keep in mind is the foundation of this chapter. Okay, let me tell you what's the foundation. Okay, so we'll read global economy is undergoing structural shift away from hyper globalization towards more fragmented and cautious trade environment. You can imagine that a family living in a joint family now making nuclear families separately. Okay, that's the same scenario happening in the world after World War II. Okay, listen carefully, this is a very important concept. After World War II, everyone was concerned about world trade, and so they founded GATT, later on WTO. But recently, if you see, countries are protecting their own interest. So WTO is absolutely irrelevant in these times, where the concepts of WTO are like totally irrelevant. There is no use of that. The reason is very simple. Countries are going for bilateral trade or regional trade bloc, like for example, BRICS, etc. So America is looking near the American continent. India is looking with South-South cooperation in the BRICS and all. So everyone is trying to integrate their economy with the regional interest, not the global interest. India is just reacting and taking action. No speeches, nothing is there because we don't want to destroy our fundamental relations with the United States of America. Because when countries meet with each other, it's not just the people, or it's not just the face, it's not just the leader, it's the people to people connect. It's like bureaucrat to bureaucrat, politician to politician, and civilian to civilian connection is there. And India US connection is very huge, and that connection you can see in the US cricket team as well. When there is not a single person from United States of America. So you can see it's like 7 people played India versus USA T20 World Cup match. 7-1 from India and 4 overseas, 2 from Pakistan and 2 from South Africa. That's USA team. That's the people to people connect. The proper IPL team. 7 domestic player, 4 foreign player. So just on a serious note, take a protectionism, that's a supply chain realignments, geopolitical tension, that is reshaping how countries engage in trade and investment. Transformation is not temporary or cyclical. It's like post-pandemic, we have been witnessing the same thing. But this represents a long-term structural reordering of global economic system. In short, I will explain what it is. From a short-term balance to a strategic position that I told you. We are setting up the stage why the external sector is becoming more political than economical. Okay, like everyone says, remove politics from cricket. No, it cannot be done. Like Pakistani people saying that remove politics from cricket. Not possible. Your Mohsin Naqvi is the chairman of PCB and is the interior minister. In Pakistan, home minister is equivalent to interior minister. It means Amit Shah is occupying both places, head of BCCI and home ministry as well. Now, how you can say that you separate politics from cricket? On the same lines, when you see global trade cannot be separated from politics, that we have seen. Now the trade has been used for strategic advantage. Okay, so economic survey in chapter 4, when you read the full chapter, with the blunt observation it started. It says that why the external sector has becoming more political. And as I told you, when politic is stable, your economy is stable, and vice versa. When your economy is stable, polity is also stable. So these two are interrelated. So here, what this chapter says about that global trade dynamics. Globalization is no longer neutral. Neutral means globalization is not excluded with the politics. The trade, capital flows, and supply chains. Okay, three words: trade, capital flows, and supply chains. They are now instrument of power. Okay, that's what survey says. They are instrument of power. It means you are using trade, you are using capital flows, you are using supply chain as an instrument of power to influence the global politics. In the past, countries were focusing on current account balance, countries were focusing on export growth, countries were focusing on accumulating foreign exchange reserves. But today, we can say in today's scenario in 2026, if you see, external sector management is about strategic revival. Okay, it's about strategic revival. And strategic revival means in the past it was done. Now the strategic revival comes into strategic survival for other countries, those who are not having the advantage. Okay. Now, if you see global context, US with China, they are decoupling. You understand the meaning of decoupling? Coupling means coming together, decoupling means moving away. So US China decoupling. What is decoupling? Previously, Apple iPhone was used to made in USA, then they outsourced to China. The same is Tesla to again China. Now you can see BYD is copying Tesla and selling at 1/3 cost. So Tesla is also having a problem. Okay. Now here the most important thing that we need to understand is about sanctioning regimes. So US putting sanctions on Russia due to Russia-Ukraine war, Iran already facing, so Russia and Iran sanctions. Then weaponization of trade. Okay, so weaponization means in simple sense weaponization of energy. You have seen in Venezuela what happened. Weaponization of semiconductor, weaponization of logistics. They are putting like a barrier in front of the ships. Okay, if you heard the news. Okay, so here the most important thing is that these three things are happening, and apart from that, friend shoring replacing free trade. It means if you are my friend, I will trade with you. Okay, so free trade replaced by friend shoring. This is a term used in survey. Okay, Lakshmi, which exam are you talking about in particular? If you're talking about UPSC civil services, around 20 to 25 questions will be there in UPSC civil service prelims examination, from which you can draw almost 50% of the question from economic survey. 50% driven from economic survey, not directly from economic survey. Okay, let me tell you, let me clarify. Okay, driven by, it means if they ask about repo rate, how repo rate affects the economy, it's a part from the survey, they've taken from survey. Okay, if they ask question about tariff, again it's a part of survey. So every sector is a part of macroeconomics. Okay, now in the strategic decoupling means moving away together, and security driven trade. Okay, like for example, survey said that India must reacting quarter by quarter. Okay, India should play a long game. They should wait and watch what is happening. So major economies restructuring trade supply with semiconductors, rare earth minerals, telecom infrastructure, pharmaceutical. Okay, these four are major industries. So trade policy tools are increasingly used for national security, technological sovereignty, not just economic efficiency. Okay, investment screening, export controls, restriction on dual use technologies are becoming common. Okay, so that's the important thing that India should take care of it. As I told you, how geopolitical realignments are there. So war, I already told you. So that shaped global trade routes. Okay, like airspaces and other. When the war was going on, airspaces were shut down. When Operation Sindoor and Pakistan attacked Pahalgam, another closure of airspace over Pakistan, and even vice versa. So you can see that these conflicts shifts how global trade will happen. New groupings are there, BRICS are there, expansion is there, Quad, okay. Then Indo-Pacific initiatives, new connectivity corridor. So they reflect the move towards block-based economic cooperation. Okay, it means WTO says that all members are equal, but here we are just not seeing WTO or following WTO. We are just going that if you like me, if I like you, then we will trade. Your likeliness, it depends on the interest of the countries. Okay, supply chains are increasingly evaluated on resilience and trust, not just cost. So what happened to the Russian ship, and what happened to the Chinese ship near Venezuela? Okay, so these are supply chains. So emergence of geostrategic globalization, it means countries remain interconnected but trade is become selectively. मैं आपके साथ ट्रेड करूंगा, आप मेरे साथ नहीं करोगे, आप किसी और के साथ करोगे. तो इस टाइप से है. Everything is politically aligned now. The trade and political interest, that too selective. So this has led to friend shoring, increasing trade among geopolitically aligned countries. If my interest aligns with you, we will trade, otherwise we don't. Okay. Data shows that trade growth between friendly nation is outpacing the average global trade growth. Okay, like for example, India was not buying Russian oil, but during pandemic we had to control our import bill. So what happened after that? We had to control our import bill. So Russia was also struggling due to sanctions and all. So Russia gave us discounted oil. So we will see our own interest. Plus, Russia agreed in trading with, like, using rupee. Okay. Now, if you see global trade performance is 2025. Since 2020, this has been used for non-traditional objectives like industrial policy, environmental goals, national security. So we have seen US-China trade tension, COVID-19, Russia-Ukraine conflict, and renewed global trade friction in 2025 when Trump again became the president of United States. Okay, so that unprecedented surge in the global trade we have seen, that was the concern. Okay, so trade policy uncertainty reached historic highs in 2025. Uncertainty, that is why we have seen the price of gold, price of silver, and other area. Global economic policy uncertainty index rose to 228.2% year on year. It means same time previous year. These are the highest level recorded in decades, signaling deeply unstable global trade environment. So trade environment is deeply unstable. Investors are also not getting confidence, and investors are pulling out money, like we have seen in FII and capital outflows from India to abroad. Now, what are the causes? Causes, industrial policy, competition over critical minerals like rare earths, monopoly of China, they want to break it, efforts to correct trade imbalances. So whenever US is having deficits, okay, they're correcting those deficits. Like India is worried about deficit with China, India is worried about deficit with Russia as well. Okay, unilateral trade actions and retaliatory tariff. So US put tariff on India, but India did not. Mexico also put tariff on India, but India did not. Okay, there are certain reasons I have already covered in by one of my YouTube video as well, that why India is not doing retaliatory tariff. Okay, because it will hurt our exporters. Okay. Now, weakening of the rules-based multilateral trading system. Okay, multilateral trading system like WTO. Okay, IMF outlook of global trade. According to IMF World Economic Outlook, if you see, the global trade volume growth projected at this expected to slow sharply 2.3. So this is weaker than 2024 growth rate. So that shows that trade momentum is fading after the front loading effect. So while 2025 shows moderate growth, the outlook signals structuring slowdown in 2026. Okay. So survey says that first reassure and then caution. Okay. Now short-term trade surge due to front loading. What is front loading? Okay, let's see. Firms accelerated import and export in 2025 to avoid anticipated tariff hikes. Okay, causing temporary boost in trade flows. However, this increase is artificial and unsustainable because obviously after tariff need to adjust things. Now global trade is becoming fragmented. It's not smooth, it's breaking into pieces. Gains are limited by geopolitical realignment. So if USA is not the friend of EU, you will not get the benefit of it. So that is realignments of geopolitical gains. Actual effective tariff rate remain lower than the announced rates due to stockpiling, tariff pause, rerouting, and trade diversion. Okay. The 2025 spike partly reflect timing adjustments, not genuine trade expansion. Okay. So here we need to understand this way that whatever happening in the short term is hurting the global trade. Now, this is divergence between advanced economies and emerging market and developing economies. So, EMDE, this is the full form of EMDE, and which is very popular in survey. Okay, so you remember this. First of all, we see the aspects. Trade growth in advanced economy, it's slower, but in EMDE is faster. Vulnerability to uncertainty lower. Here it is higher because advanced economies are initiating those vulnerabilities. Okay. Sensitivity to policy shocks, that is moderate because they have good structure, but here in high because of capital flows, dependency on services. We don't have hard currencies, so the acceptance of the currency is also low. So here you can say with all these aspects, advanced economies are at better position. That is why they are disrupting the world trade. Okay. So although emerging market and developing economies are expected to see stronger trade growth, they are more exposed to trade policy uncertainty. So it's not about the demand and supply, but it's about the policy uncertainty that may disrupt the trade volume more severely. Okay, everyone write clear in the chat box if the background and everything is clear. Okay. So here you can see growth in trade volume, goods and services, both in AE or EMDE, advanced economies and emerging markets and developing economies. Okay. So here you can say AE export, AE imports, EMDE imports, and EMDE exports. So 2024, you can see 2025 and 2026. So tariff actually reducing the whole trade scenario. Okay. Now trends in India's trade performance, how India actually doing in the sections. Okay. So here we'll see that India has deepened its integration with the global economy. It means India is now integrated with the global economy. So India will also be affected by its fluctuations. Okay. Improve the quality, scale, and resilience in the trade over time. Resilience means how strong at the time of vulnerabilities. Okay. So India's role in global trade has expanded steadily. That we have seen, and we will see again in upcoming slides as well. Okay. The share in global merchandise exports. Okay. So there are two types of export: merchandise, where you can touch tangible goods. Okay. Second is invisible trade, that is services. So you can say merchandise means goods, physical items, and invisibles means services. That is intangible, you cannot touch them. Okay. So last, we can say almost 20 years, global merchandise export nearly doubled 2x. So its share of global commercial service exports more than doubled in the same period. So showing that India's strength is in knowledge-based sector. But the issue is India cannot be dependent only on services. Okay, so that we will discuss in the upcoming slides. Now, if you see the record export performance, so export performance is there, resilient, good exports, but a strength in services trade. So India's service exports remain the main pillar under our balance of payment, that is current account. Like IT services in India, from abroad, business services like BPO and all, R&D, professional services continue to generate a strong surplus that help to offset merchandise trade deficit, supporting overall external stability. It means in merchandise trade and in services trade, in merchandise trade we generally have deficit, but in services trade we have surplus. So when we have surplus, the surplus is more than this deficit, so overall we got addition. Okay, but as a global economy, we want to become a global player. We cannot be dependent only on services. That is why government is pushing merchandise trade as well. Okay, now improvement in merchandise trade, it means growth in non-petrol merchandise export signals a shift in the higher value manufacturing and knowledge intensive goods. This reflects that we have improved competitiveness and integration. It means globally, India's goods are now competitive with other countries in the foreign market, and integration means integration with the world market. Okay? So global value chain means if you are suppose making a car, then car is made in certain pieces, certain stages. Okay, if India has become the part of this chain, India will become its strategic position in terms of India's interest. So PLI scheme, approximately 2 lakh crore we invest in PLI scheme, so that are supporting this structural shift for Indian economy. Okay, now trade diversification, India has diversified both export destination, it means not just dependent on US but opening other markets as well, reducing over dependency on few markets, so searching for more market that can help in terms of slowdown. Next is product basket, it means the items that we are exporting, we have expanded that as well. Okay, so still the scope to expand into more complex goods. So India ranks high among global south nations. South nation means developing nations. Okay, in diversity of trade partnership, which enhances resilience against regional and geopolitical disruption. So whenever there is disruption, okay, it is important. Now, role of trade agreement and policy support. Now, when you see that India's external position is strong, it's not vulnerable. Okay, right now services are saving us. Okay, I'm just coming, Aditi and Nikita, just coming on your question. Okay, just finishing this slide. Now, role of trade agreement and policy support. Now, expansion of free trade agreements we have seen, comprehensive economic partnership agreements to improving market access to Indian exporters. Okay, digital tools like tariff information platform, institutional mechanisms such as export promotion mission, these help exporters using trade agreements effectively. It means when we conduct the trade agreements, we should be able to understand that what is our contribution in terms of export. If you see export contribution in terms of Indian economy, it is very, very important that we should be clear about what's the role of RBI, what's the government measures have improved export credit, excess liquidity, especially during global uncertainty. Because right now we are seeing that India's external position is good, is decent. Okay, but it is still vulnerable because so many things are dependent. Like India is only exporting services. India is only exporting services. Now, what's the important thing here? To offset with merchandise trade as well. Because if goods are not being traded properly and if something happened with services, then it will be a problem. So we are not able to diversify. But here, this year, we have diversified in terms of destination and in terms of goods as well. Okay. Okay, let's see what Aditi is saying. India aims at 1 trillion merchandise export. Okay. But what is the current share? I'm not unable to find the statistics. India's merchandise export data in trillions. That's what you want. Okay. And as far as I remember, it is somewhere around 450. You have to check that. Okay. If you're asking me data, I don't remember the exact data, but it is somewhere around 450 billion. Because we have to do 2x. Okay. Next is Nikita. But sir, the surplus in services sector is not necessarily good for the economy. Okay. Not good for the economy. Whereas the surplus in the industrial sector generally is. Thank you so much. मैंने म्यूट किया था, but I think still. Did you get the noise? पता नहीं सर्दी हो गई अचानक से, है ना? Whereas surplus in the industrial sector generally is. So is it appropriate to equate surplus in the एक minute, but sir, a surplus in the service sector is not necessarily good for the economy, whereas a surplus in the industrial sector generally is. So is it appropriate to equate them using the same parameter? See, Nikita, here it's not the same parameter, it's the accounting. It means the money coming in and out. Whether it is coming from merchandise or services doesn't matter. First of all, it should be the surplus. So when it is a surplus, it is good. But now we need to see how we can secure this surplus for the long run. So if something will happen to the services, then obviously that services surplus will fade away. And in that scenario, our merchandise goods should compensate. Okay. Visuals only. Thank you. Pranav Singh, cumulative export of merchandise. रियल टर्म्स, नॉमिनल टर्म्स बेटा वो भी देखना पड़ेगा, है ना? डेटा उस पर भी देखना पड़ेगा. लेट्स सी आगे कहीं स्लाइड में लिखा होगा. Pharma sector we are doing good, but because of many things, the pharma sector is not performing because of patent issues and other things. Okay, we are just exporting generic medicines. So in the name of health, global health, we are providing support to the pharma sector. So here you can see India's total. This is merchandise and this is services. You can see both. So this is total export, total imports, overall trade balance. So you can see here how it is, and it is somewhere around negative. Okay. No, services surplus means not brain drain. Services surplus means the TCS, what TCS is doing. Okay. Bringing US projects in India and Indian people serving it. So dollar coming in our country. Like BPO services. Okay. Like for example, when you post anything on Facebook or Instagram, it is reviewed by a bot, that is automatic review. But when automatic review fails and you request to like put some more restriction or remove the post, then it is reviewed manually. And who checks this is somebody sitting in India working for Meta. Okay. Yes, base year change हो गया बेटा. 22-23 हुआ है, 22-23. 22-23 चेंज हुआ है. ठीक है. इन्फ्लेशन का अलग है ना, बाकी का अलग है, ऐसा भी. ओके निकिता, डन. दिव्या डन. ठीक है. Let's talk about merchandise trade. India's merchandise trade performance reflects resilience. Resilience means how strong India is. Okay. Despite volatile global environment, the country continues to maintain its position as a reliable global trading partner. Okay, that's what, because government is supporting our exporters. Okay. Now in financial year 25, merchandise export stood at this. Okay, remain, you can say, broadly at financial year 24 levels, with the headline growth export appears subdued and underlying export base shows a strong momentum. So Aditi, the data you were looking for, you can see here. That is FY25 last year. तुमने भी मेरा टेस्ट ले लिया डेटा का. Somewhere around 450 I read in the newspaper. Okay. So a key positive trend is the robust performance of non-petroleum, non-gems and jewelry export, which account for 78.7% of total merchandise exports. So this is a key positive trend. Non-petroleum means what we do is simply we import Russian crude oil and we export after refinery. That is petroleum export. Gems and jewelry all same. So it means you can say a key positive trend is robust performance, which is around 78.7% of total merchandise export. So that grows. So these export grew by 7.5%. Okay. That reached historical high of USD 374 billion. So it means what I said, that India is diversifying its market as well as its basket. Okay. Thanks, Aditi. ठीक है, export composition and sectoral trends. Now when you see India's merchandise trade, okay, like for example, let's see if CAD is there. Okay, let's see if talk about CAD is there in our discussion. Yes, current account is there, so we'll discuss that then and there. Okay. Now India's merchandise export basket is becoming more diversified, as I told you. Major export sector, petroleum products, declined by this, telecom instruments, drug formulation, biological. But other sectors showed gain, like cotton ready-made garments, electric machinery and equipments, motor vehicle and cars. So this reflects that electronics manufacturing hub. So finally, Make in India is showing its colors. Okay. Import trend, you can say petroleum crude, which is very important, gold, petroleum products, over 1/3 of our total import. Gold imports rose sharply. So whenever we have wedding season and all, due to rising prices and strong domestic demand. So when weddings are there, people don't see prices, they just buy gold. Okay, like electronic components, telecom instruments, computer hardware, they have also shown strong growth in import. So right now in India, demand for mobile phone is high, so we are importing. Demand for telecom instruments, like we can say towers, okay. Demand for computer hardware, because everyone is studying, and right now as a student you need laptops. So rising import of intermediary goods, capital goods indicate robust domestic demand and expanding manufacturing capacity. So we are building mobile phone assembling, we want intermediate goods of that mobile phone. Okay. Now merchandise trade deficit, because imports grew faster than export, the merchandise trade deficit widened to USD 283 billion. 17.6% increase year on year in comparison to the last year, you can see. So this widening deficit reflects strong domestic economic activity and import demand rather than export weakness alone. It means exports are also growing, but in India, internal domestic demand is so high that they need to import as well. Okay. And somebody says Indian economy is a dead economy. You can see 17% rise in import. So you see the trend. Merchandise export grew by this. Core exports grew by this. Electronics, you see number. Imports rose by 5.9%. Non-petroleum, non-gems, 9.5%. So these are driven by high imports of electronic goods, machinery, chemical material. So that is why the deficit is there. Okay. So here it does not mean that our exports are not performing. Okay. Yesterday I told you in the last lecture what is YOY. It's year on year. Okay. It means if I compare April to December 2025, then if I write year on year means I'm comparing with April to December 2024. Got it, beta? Supreet, I think you are joining for the first time the economic survey. This is year on year, okay? Please watch other 3 chapters as well. Otherwise, you won't understand majority of those things as we proceeding in the chapters, okay? So you can say merchandise trade performance, merchandise exports, merchandise imports, and that's the trade deficit, dot, 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 which is around $283 billion. Okay. Now comes to diversification of India's exports. 2 things. Destination means not only US but other countries. Import sources, both. So instead of overall export collapse, India has shown resilience through market diversification. It means when Trump was saying something, our prime minister was not crying in the corner कि यूएस प्रेसिडेंट ने ऐसा किया, मेरे दोस्त ने मुझे धोखा दिया. अरे कोई दोस्त कोई दुश्मन नहीं होता. In international trade or in international geopolitics, only thing permanent is interest. There is no permanent friendship, no permanent enemy. Okay, so always remember, when Trump backstabbed India, if you say so, I never trust Americans on the same lines. Like Henry Kissinger famously said that being an enemy is okay, but being a friend of America is more dangerous. So diversification of export destination. How? When exports to the US declined, India's total export to the world grew. Most visible labor intensive sectors. Okay. So what's the big takeaway? That US share in several sectors fallen. India compensated with Middle East, Africa, Europe, trade agreements with UAE, UK, New Zealand. Okay, so that's how we diversified the market. Diversification of import. How? So crude oil imports strengthened, broadened its supplier base. Okay, rising suppliers like United States, UAE, Egypt, Nigeria, Libya. And we have increased imports from Brazil and Brunei as well. Declining share we have seen here in the 4th, majorly oil. Okay, majorly oil. And you know why? Here you know the reason. Now coming on to services trade. Okay. So service export reached all-time high to USD. This growth, you see growth. See the growth. So very, very promising, very impressive. Service import rose this 11%, reflecting higher demand for global business and financial services as well. So service trade surplus is 188.8 billion. Surplus finance nearly 2/3 of the India's merchandise trade deficit. So if the trade deficit is 100, okay, it is like almost 66 financed by services. So how highlighting its macroeconomic importance. It means how our services trade is important. Key sector first is software, second is business processing, consulting, fintech, etc. These segments are less sensitive to the global goods trade disruption. So anything will happen. Accounting will not have much impact. If profits are impacted, accounting will not have much, consulting will not have much. Okay, so that's why these are majorly stable. Role of global capability centers. India has emerged as global hub for GCCs. Okay, like major driver for skilled talent pool, cost competitiveness, strong digital and physical infrastructure in India. SEZ we have special economic zones, tax incentive, vibrant startup ecosystem. So that has held services. Okay, in India, services startups are huge. So India's AI skill penetration is ranked second globally, strengthening its position in the high-end export market as well. Okay. So here India is doing well, less price sensitive than the goods trade, because if you put suppose 50% tariff on textile, or like clothes or textiles, apparels are out of the market. Nobody buys. Okay, so driven by quality, expertise, knowledge intensities. Okay, strong positioning, technology like UPI and other, finance, consulting, innovation-led services. This supports foreign exchange stability and cushioning trade imbalances. So again, that is why we are saying that Indian economy is robust. The reason is this. So here you can say India's services trade performance from 84 to 188. Okay. This is the data year on year if you want to compare 135 to 151. So again, it is going up. Now this is current account development. Okay, listen carefully. Very important thing. Okay. Now when you see its importance, now current account deficit remains manageable. Okay, like foreign exchange are adequate to cover our imports. That's what we call import cover. Okay, short-term external debt is there. Portfolio outflows are there. So these are the things, but still we have decent amount of foreign exchange to cover that. Are we actively using foreign exchange reserves to smooth the volatility? So the fluctuations in the market, RBI is making the smooth. Okay, so not defending the fixed level of rupee, but they are allowing rupee to depreciate. The reason is simple, because we have good amount of foreign exchange reserve, depreciation won't hurt. But if we control the depreciation, the tariffs will hurt our exporters. And if tariff will hurt our exporter, then in future, in 2-3 months, it will hurt our foreign exchange reserves as well. I hope you got the connection here. Okay. So India is not in external crisis situation like 1991 or like in 2013, a small crisis we have seen. Right now, we are at a very strong position in terms of our foreign exchange reserves. And if rupee depreciates, and we have reserves to compensate, but if rupee depreciates, exporters will earn more and will have more competitiveness in the global market. And when we have these two things, India will keep on earning foreign exchange reserves. Okay. Plus, what this government has done really well, wherever India's gold kept in the vault of UK, US, gradually in last 10 years, this government has taken those all back into our country. Like 4 trillion worth of gold of Germany is now in USA, and USA is not giving the gold back. You can read the news, you can verify it as well. India's gold is with India. In last 10 years, we have called every piece of gold into our country. Okay. So situation is not like 1991. But what caution that we need here? Okay, just listen carefully. Despite we have macroeconomic stability means inflation, GDP, balance of payment. This is what I call, or that's what in economics we call macroeconomic stability. Right now, rupee is underperforming with comparison to peer currencies. Okay. Peer currencies means other currencies equivalent to rupee. Okay. Portfolio flows going out. Okay. They are more volatile. It means foreign investors pulling money out of India. The reasons are 3. Okay. Just because markets are now markets because markets now price certain things. Okay, like for example, you understand, because of geopolitics, that's the one reason. Second is trade vulnerability because of tariff and other things, and the third one is long-term competitiveness. These 3 are the reason: geopolitics, trade vulnerability, and long-term competitiveness. So external stability today is as much structural as it is macroeconomics. Okay. So external stability we need to structure our macroeconomics in particulars. Is it clear with everyone? Just write clear in the chat box if things are clear. The whole story, the picture of current account. Okay. So merchandise trade deficit remains large. Services covering up. Okay. यही होता है बेटा. One of my friend, we were having a conversation. I asked, he was just ranting on the government. Okay, he was just saying government is not doing this and that. मैंने ठीक है, we are not like China. चाइना में चीजें तेजी से होती हैं भाई, because there is autocracy, dictatorship we can say. In India things move on, like when you see Mumbai, there's huge infrastructure development in Mumbai, है ना, sea link and all infrastructure. We have seen Vande Bharat, we have seen increased number of Vande Bharat, है ना. On every route you find, wherever the route is 6 hours to 8 hours, they have Vande Bharat. Now Vande Bharat sleeper as well. So I'm saying that in our country things are moving. Like if you see, I'm not against any political party, but when you're saying something you should do something. Okay, like you are doing something for Delhi pollution. एक छोटा सा एग्जांपल है. Okay, during the last 10 years of Kejriwal there were 300 electric buses. In 1 year of current government, that is of BJP, they have rolled out 1000 electric buses. Data may be here and there, but you can see when the political will is there, na, country grows. When political will, it means when politicians like to do something. I'm not saying all people are good in the current government. No, there are other people. Corruption must also be there. That may be like come out of the surface after we will have the change in the government. We cannot say that. But what is visible on the ground, we can see it is visible. So as a prime minister, there's a lot of things. External sector is there, then internal sector, then party alag, state elections. So a lot of things are there. Okay. But here, this government looks like a stable government, doesn't look like a coalition government. That's the confidence that we are giving to the global. Okay. So merchandise trade, if you see, देखो बेटा नजरिया है, अच्छा देखोगे तो अच्छा दिखेगा. आपके भी काफी फ्रेंड्स होंगे, there are so many friends. When you see them, you see good things about them, but when you have a like an argument or something, you see a lot of bad things. So these people are bad, but when you think about, no, this person helped me in that day, he's a good person, he used to help me in colleges, he used to bring lunch, then the whole perspective changes. You know, so things are moving. Like China is very far ahead than in EVs. China is almost 100% EVs in some of the provinces. India is somewhere around 60%. But when you compare to Europe, na, Europe is 30% in terms of public transport in electric. So you can imagine that we are far ahead than Europe. Okay. Like tomorrow, today morning, I was teaching economics optional, international economics. I was teaching international economics in the morning class. So I told them that previously countries used to trade, like America is producing this, Germany is producing. Right now, these countries are nowhere longer related to the trade. Now they are pushing their companies, like French president coming for Rafale, coming for Airbus of European Union. America is coming for more market access to, we can say, Apple. Okay, so they are promoting their MNCs. But when in India we promote our capitalist class, they say अंबानी चोर है, अडानी चोर है, सरकार इनको सपोर्ट करती है. और फिर हमारे अंदर का ना सोशलिस्ट जाग जाता है, नहीं सबके लिए बराबर होना चाहिए. अरे भाई बराबर तब होगा ना जब पहले किसी के पास होगा. अब पूरा पैसा मुकेश अंबानी के पास तो नहीं जा रहा. ही इज जनरेटिंग जॉब्स. रिलायंस स्मार्ट इज देयर, जियो इज देयर. हाउ मेनी जॉब्स ही इज जनरेटिंग? वो पैसा इंडिया का है, इंडिया के लोगों का ही है, इंडिया में ही रहने वाला है. इफ यू विल सेव इन द बैंक अकाउंट, बैंक्स विल बी एबल टू लेंड मोर. तो पैसा कोई सर पे रख के नहीं ले जाता. व्हेन वैल्यू इज क्रिएटिंग, द इकोनॉमी इज ग्रोइंग. ओके, ठीक है. चैट बॉक्स में काफी कुछ बातें हो गई. यस, ईवी इज इंक्रीजिंग डे बाय डे. ठीक है. सो सर्विसेज ट्रेड हैपनिंग. ओके, IT services continue to generate stable foreign exchange reserve that we have seen. Okay, services can stabilize balance of payment, but they cannot anchor currency strength forever. Okay, listen carefully, this is the limitation. Services can stabilize balance of payment, but they cannot anchor It means they cannot guide, they cannot protect. Currency strength forever. So country aspiring to global power like India, we want to become global power. Okay. They cannot rely only on services. Cannot rely. We need to push our merchandise trade. Simple, as simple as that. So you see one district, one product program. Okay. In current affairs, one district, one product. So that's how we are building aspirational district program, etc. Okay. Yes, you can write. Services can stabilize the BOP. Okay, if you want, you can write. Services can stabilize the BOP, but they cannot anchor. But they cannot anchor. But they cannot anchor currency strength forever. But they cannot anchor currency strength forever. Okay. So here you see, India continues to run a structural merchandise trade deficit, rising import demand driven by growth, energy needs, gold imports. So this adds pressure on trade balance. Deficit reflect on economic expansion, investment activity, not just weakness. Okay. So services trade majorly, India maintains a large and stable surplus in services trade. Key contributor IT services, business services. This we have seen. Okay. So that's how we are stabilizing the anchor of the current account. Okay. Now comes to capital account. Now here India transformed itself. And not only this government, but government since 1997. The credit goes to all the government since 1997. You understand hot money? Hot money means suddenly that goes out of the country. 1997 Asian financial crisis gave hot money example. Thailand, countries like South Korea, Taiwan, all experienced huge amount of outflows. So India, from those situation of hot money, now India is moving towards strategic capital. Okay, let's bear with my handwriting. Strategic capital. From hot money to strategic capital, India moved a long way. So survey talks about that India moves from trade to capital. Trade to capital, you understand? Trade means we're spending money, buying, selling, khatam. No investment. Okay. So living paycheck to paycheck. Salary आई तो ठीक है, नहीं आई तो broke. वैसा वाला. So the old model under capital flow is like you should be dependent on FPIs, FPI foreign portfolio investment. Okay. So for like, yeah, investing more in capital, yes, maybe infrastructure. So previously it was like depending on FPI, foreign portfolio investment. Okay. We were vulnerable with global interest cycle as well. So business cycle, interest cycle. So if US people need money, they will withdraw from our country. If they're getting more return in US, they will not invest in India. This was old model. Now what India changed? So this is what we call hot money. When the money is hot, okay, so it can go anytime. You cannot touch that. But when it comes to strategic capital, now we are focusing on greater emphasis on FDI. If you want India's market access, you come and invest in India. That's what we are saying. Long-term capital related to manufacturing, infrastructure, supply chains. Like India continued FDI in electronics. India continued receiving FDI in renewables. India continued in EVs, defense manufacturing. Okay. 4 areas. So here you can write electronics, renewables, EVs, defense manufacturing. 4 areas where India is continuing receiving FDI. Okay. So that is India's FDI is stable on external account. So that required more capital, not speculative inflows. That's why our exchange rate is stable in comparison to the what happening to the other currencies. Okay. Yes, you can say insurance sector, FDI and insurance sector. Limit increased, GST declined. So win-win situation. India needs insurance money, जैसे मेरा इंश्योरेंस है, हेल्थ इंश्योरेंस है ना. अब I will not praying कि मेरा health insurance use हो, but still I am contributing to the funds. Same line, you must be having health insurance, term insurance, etc. Okay. So the capital is available for the country to invest in infrastructure. बेटा देखना पड़ेगा, याद नहीं है कितनी slides है. I'm not sure about the number because if I just the scribble will be gone. Okay. So here electronics, renewables, EVs and defense manufacturing. Exchange rate BOP link. Boring लग रहा है क्या इशिता? I hope you are enjoying the whole story. External sector we are discussing. This is a very big thing for 2025. Is it boring, interesting? मजा आ रहा है? नहीं आ रहा? I can see numbers are stable. 52 people on Zoom. है ना? कम लोगों को इंटरेस्टिंग लग रहा है. Not everyone is writing interesting. ठीक है. Yes. You will understand politics as well. कोई बात नहीं, मजाक कर रहा हूँ. ठीक है इशिता, don't take it seriously. You can watch the recording anyways. There's no issue. Okay. Like Pakistan is saying we'll not play with India, but ICC asked them, there's no official statement from your side. It's just the Twitter handle of your government says that we will not play with India. Twitter handle is not official. They're not giving anything official. You know why? Because they want to see what consequences they will face if they'll not play with India on 15th of February. 7 years of earning, last 7 years of earning is equivalent to the India-Pakistan endeavor. है ना? But they know. So they are just seeing what are the consequences. It's not just ICC or India. It's Sri Lanka is also scolding them. Because Sri Lanka will also lose a lot. When India and Pakistan playing in Colombo, imagine how many people from India travel to Colombo, book hotels in Colombo, take cabs in Colombo, eat at the restaurants of Colombo. The economical boost in Sri Lanka. अब सोचो ये कितनी छोटी कंट्री है कि एक मैच ना होने से इनकी इकोनॉमिक हालत ऊपर नीचे हो जाती है. इमेजिन. एंड दे आर टेकिंग sides against India. India is a very big market. People say our population is like our biggest weakness. I say population is the, like when you open Instagram, the highest number of user from India. YouTube highest number of user from India. किस चीज में हम हाईएस्ट नहीं है? हर चीज में, अच्छी हो बुरी हो, वी हैव द नंबर्स. सो नंबर्स का कोई कंपटीशन नहीं. इवन पाकिस्तानी कंटेंट क्रिएटर आर क्रिएटिंग कंटेंट फॉर इंडिया so that they get views in India. So that they get more views. So they are creating. अब इंडिया पाकिस्तान हार जाती है, वो पुराने पुराने सेकंड हैंड टीवी खरीद के लाते हैं और उस टीवी को फोड़ते हैं. है ना? इंडिया इज नॉट फॉर बिगनर, सीरियसली. मतलब इतना अच्छा मैं पढ़ा रहा हूँ, इसका लेक्चर यूट्यूब पे भी है, सब कुछ है, सबको समझ आ रहा है, फिर भी कुछ बच्चों को उसमें भी तकलीफ है. सो इंडिया इज नॉट फॉर बिगनर्स, होता ही है। बोले नहीं नहीं सर, और ऐसा पढ़ाओ, डिटेल में चाहिए, इसका पीडीएफ भी चाहिए, इसके क्वेश्चंस भी बना के दो। मैंने कहा बेटा एग्जाम भी लिख के आऊं, तू उतनी भी तकलीफ क्यों कर रहा है, मैं ही लिखाता हूँ। ठीक है। बोले सर स्वर्ग मैं जाऊं पर सेक्रीफाइस आप करो, ऐसा नहीं हो सकता ना। यस। ओके, लेट्स कम बैक टू आवर टॉपिक। ओके, बड़ी बड़ी है ना। अभी बेटा पढ़ाई में ना थोड़ा लिमिटेशन रहती है, इसीलिए। थैंक यू अदिति। यार एक्चुअली क्या है ना, मैं जानबूझ के नहीं करता हूँ, इट्स जस्ट द ऑब्जर्वेशन, इट्स जस्ट द ऑब्जर्वेशन। सो मैं वो चीज देखता हूँ, मैंने कहा जीवन में और क्या चाहिए, सो आई आई स्पीक ट्रूथ, और उसमें हंसी आ जाती है। सेम हैपेंड विथ माय वाइफ एज वेल। I say it generally while watching cricket or something, and she goes LOL or ROFL, क्या क्या होता है वो, है ना? So here we'll see prolonged weakness may hurt financial channels like rising cost of foreign borrowing, triggering capital outflows, है ना? Long-term currency strength depends on sustained export competitiveness, higher domestic savings, stronger manufacturing export base and all, है ना? So as we have seen in East Asia as well. So this is how exchange rate and BOP can link with each other. ठीक है. I should try stand-up comedy. Economics is stand-up comedy. देखो स्टूडेंट्स को भी पता चलेगा कितनी नफरत है पाकिस्तान से, है ना? मेरा दोस्त भी कहता है देखो पाकिस्तान से कितनी नफरत है। इवन मेरे यूट्यूब सब्सक्राइबर 14% सब्सक्राइबर आर फ्रॉम पाकिस्तान। बट सच सच है भाई, हरकतें ही ऐसी हैं। उस देश को हर से प्रॉब्लम है ना? पहले हिंदुस्तान से प्रॉब्लम है, फिर बलोच से प्रॉब्लम है, अब शिया मुस्लिम से प्रॉब्लम है। वो है देश बना ही क्यों है, उसकी कोई आइडेंटिटी नहीं। ठीक है। सो फॉरेन पोर्टफोलियो इन्वेस्टमेंट, volatile component. So FPI flows shows cycles of inflows and outflows, heavily influenced by global interest rates, risk appetite, US bond yields. These are the things important. Debt flows partly stabilized through mechanism like VRR, FAR, but equity flow remain sentiment driven. Now here we need to understand in a simple scenario that yes, the issue is there. It means Indian, if you see Indian economy, our capital market is one of the strength right now. Capital market is very much a strength, especially in terms of debt funding. Now when you know countries grow, countries does not only grow on equity, they grow on debt as well. Debt funding means stable capital flow for the company. So these are government securities, like fully accessible route, that is FAR, in terms of bonds. Okay. Other capital flows are also there. So banks are also getting capital. But only one problem is there that I told you, deposit to loan ratio. So when you see external debt position, debt to GDP is stable. Small share of global external debt. So we are not dependent on external sector in terms of debt and exchange rate. That is why India is free floating the rupee. कि भाई यहाँ ठीक है depreciate हो रहा है, हो जाने दो. Don't worry. If it is depreciating, don't worry. Why? The reason is simple. The reason is simple because we have almost 2 to 3% of external debt. Okay, less than here it is 5%, but let me tell you honestly, it's 3 to 4%. Favorable maturity profile, so our credit rating is improving. Strong reserve, रिड्यूस वल्नरेबिलिटी, और क्या चाहिए इन्वेस्टर को ना. So this is global trade in foreign direct investment, FDI. Okay. So global trade. But before that, I'll tell you one more thing about exchange rate. Okay. The exchange rate is an outcome, not a policy instrument. Okay. Let me tell you, बहुत सारे स्टूडेंट्स ने मुझसे पूछा, सर रुपी तो 91 पहुंच गया. ओके, रुपी 91 पहुंच गया, तो मैंने कहा भाई तेरे को थोड़ा ना डॉलर में सब्जी खरीदनी है, व्हाई आर यू वरीड अबाउट दिस. सो व्हेन यू सी एक्सचेंज रेट, ये लो बेटा, external debt remains moderate, manageable, stable debt to GDP ratio, which is 20%. Okay. So you write this line. Okay, you write everyone this line. The exchange rate is an outcome, not a policy instrument. तो जो अनपढ़ गवार लोग है ना, अगर वो आपसे आर्ग्यू करें कि रुपी डेप्रिसिएट क्यों है and why are we not controlling, you give them this line, that exchange rate is an outcome, not the policy instrument. Do you understand cause and effect? Okay, it's like when you give accelerator, गाड़ी के टायर घूमते हैं. So गाड़ी के टायर घूमना is an outcome. Policy instrument is accelerator in your vehicle. ठीक है. So India does not target any specific rupee value. India का कोई टारगेट नहीं है कि रुपी की वैल्यू इतनी होनी चाहिए. No. RBI intervenes only to smooth volatility. When volatility is fluctuating, RBI then only intervene. RBI prevents disorderly movements. If movements are huge, RBI will protect. Okay. So RBI bought dollars during inflow surge. So when inflow comes in, it means when dollar is coming into India, RBI will buy dollars and RBI will sell dollars during outflows. So this is simply leaning against the wind. Okay. हवा के हिसाब से चलना. So exchange rate management in India prioritize stability over competitiveness through depreciation. Like when you compare with China, China gradually depreciate their currency to gain export competitiveness. But India's exchange rate policy, if you read the RBI document, you clearly stated, you will see that India's exchange rate management is about stability in the Indian economy rather than competitiveness through depreciation. Okay. Is it clear with everyone? Clear. Yes, exactly. The kind of balancing mechanism. Okay. Now we'll go to FDI. So you see FDI. FDI reached about 1.6 trillion, up by 14%. However, much of this growth reflect financial conduct of flows rather than store. This FDI contracted in recent year, deeper slowdown, real cost. So here see that global FDI levels, you see mixed but fragile growth is there. It means growth is there. Even with the full fragile world market, India is receiving FDI. So global trade growth and global GDP growth. So global GDP growth is more than global trade growth. Still India is getting decent amount of FDI. काफी कम लोगों ने क्लियर लिखा, सभी को समझ में आया है ना? Only few students, others are giving rest to their fingers. बेटा यही तो एक मेरा मोटिवेशन है, नहीं तो ये चीज पढ़ते पढ़ते मेरी उम्र निकल रही है. You have to show some passion in the chat box. ठीक है. वाह यार गीतू, so proud of you. Yes, that's what the revolution. If you follow me on Instagram, you must have read my bio. My aim is to make Indian economy from largest democracy to largest economy. So proud of you, Gitu. You also make the aim. जब तक हम इकोनॉमिकली स्ट्रांग नहीं होंगे ना, कोई आवाज नहीं आएगी. Nobody will listen to us. They used to say India is a soft power. Okay, although I'm not still happy. Previous government was not able to do anything. This government is also not doing enough. पहले की सरकार क्या करती थी? कोई टेररिस्ट अटैक हुआ, वी कंडेम दिस टेररिस्ट अटैक. ठीक है भाई, कंडेम करने से क्या हो, फिर से करेंगे, फिर से हाथ मिला लिया, फिर से क्रिकेट खेल रहे हैं, जा रहे हैं आसपास सब. Now what this government is doing, when they do something, we stand up, दो तीन मारा और फिर बैठ गए. Although I'm not still satisfied, but still doing something than nothing. If you remember Ajit Doval's speech, you do one Mumbai again and you may lose Balochistan. Now this is, I'm live. I hope you understand what is happening there. So I don't know about POK and all, but in reality, borders do change. If you see 50 years back, borders, 100 years back, 100 तो बहुत ज़्यादा हो गया, 50 years, 20 years, you see, borders are keep on changing. So there is high possibility. ठीक है? Now regional divergence, I already told you about regional divergence. FDI flows to developed economies rebounded strongly, rising about 43% with Europe, major financial hubs. Developing economies, you see, by contrast, flows to developing economies either stagnated or declined. So FDI declined. That is why I'm saying that not only just services, okay? Low income and least developed countries saw particularly weak investment, with many experiencing stagnant and falling inflows. So this is like a regional divergence. It means FDI is moving back to developed countries. Okay. Yes, exactly. If the country is in trouble internally, it makes noise externally. Very good. Now, sectoral strategic shift. Technology and strategic sectors rising. FDI is increasingly concentrated in technology intensive strategic sectors such as data center, semiconductor, AI, digital economy. And weakest in traditional sector because nobody wants to invest heavy capital in traditional sector where growth is low. So investing in infrastructure, renewable energy has been falling. But that will help in crowding in effect. Okay. I hope all of you are aware about crowding in effect. It means where government takes initiative, okay, private sector follows government's path. Implication and risk, widening divides, structural slowdown, and uncertain outlook. That's the problem. In simple sense, we can say that global trade is slowing down because of certain reason. Protectionist supply chain is becoming regional, not global. Okay. Global example, you can say US Chips Act or European Union CBAM. Okay, CBAM, Carbon Border Adjustment Mechanism. Okay, China +1 strategy is going on. Okay, so India cannot simply replicate what East Asian country did in 1990s. The situation is different. The context is different. So what is India's strategic response? This is trends in investment. Overall capital flow, FDI plus FPI. So India continues to receive large scale cross-border capital flows. India shows deep integration with global capital markets, sustained investor interest, and higher interest rates. So higher return. Okay. Now, if you see global position, FDI landscape, India saw a marginal 2% decline in FDI inflows. This drop much smaller in many emerging countries. India remained largest FDI recipient in South Asia, surpassing peers like Indonesia and Vietnam. So India is continuous receiving FDI. Although investors are not investing that much due to uncertainties and all, but still India is in a decent position. So here are certain data. 60% of FDI equity went into services, computer, trading, non-conventional energy, construction, automobiles. So shift, you can see equity inflows 51 billion, FDI inflows 81 billion, 13% growth. Data taken from RBI. Net FDI improving, FDI outflows from India rose, but profit repatriation by foreign investors moderated. It means they earn profit in India and they repatriate it to their home country. So if this is their foreign country and this is their home country, the profit repatriation is moderated. It means they are keeping their profit in our country to reinvest. That's a good sign. FDI surged to 5.6 billion in this period from just 0.8 billion year earlier. This is net FDI. So this suggests net capital retention within India. Okay, so it means more opportunities. They're not just taking money out of India, they are seeing more growth opportunities to invest in. FPI. So US rate hike, global risk of phases. So India experienced cycles of inflows and outflows. So whenever US trade, how many of you understand this? Fed reserves or federal rate? Do you understand this? Yes, no, quickly. I'll explain in short. Everyone understands that? I can see one no, rest of the saying are yes. If I have more no, then I will explain. Okay, so quickly everyone. Okay, so listen carefully, okay? Suppose for example, in India, 7% is the return on capital. In USA, it is 3%. Okay, in USA, it is 3%. So those who are saying no, just tell me, if you have 100 crores, where will you invest to get return? So if you invest 100 crore in US, you will get 3 crore in return, and in India, 7 crore in return. Where will you be investing if you will have these two options? Okay. But there is a problem. What's the problem? Everyone saying India? Yes. Rupee to dollar rate plus vulnerability of the return. So if Federal Reserve will say that I am increasing the interest rate to 5%, and in India, because of repo rate and all, if the interest rate goes here, now in order to not take the exchange rate risk, this exchange rate risk, US investment looks more stable, more lucrative. So money takes out from India to USA for more safer options. Okay. So whenever we reduce the repo rate and all, return on foreign investor on foreign capital goes down. And when Federal Reserve say that we are increasing the interest rates, that goes into outflow of capital. Is it clear with everyone? Clear with everyone? Okay. So this we have seen 6 months of outflow, 3 months of a strong inflow, modest net flow. So global condition eased, equity inflows rebounded, and showing that investors still hold positive medium-term view on India. Okay. So this is trends in FDI. You can see this. Gross inflows, repatriation, net FDI. So net FDI by India, net FDI to India. So this is purple, this is green, this is net FDI together. This is repatriation. It means this yellow, sending money abroad. But this blue, that is total inflow. So here you can say inflow increasing, repatriation slightly going down, if you can say. Okay, these graphs are important. कितना आसान होता होगा ना पॉलिसी मेकर्स के लिए by seeing this graph, है ना? Foreign exchange reserves, 701 billion, up from 668. 700 billion we have never seen in the history. Reserve adequacy is huge. 11 months of cover. If you have 6 months of cover, which is decent, in 1991 or in 1990 when economic crisis was there, we left with 15 days. 15 days of import cover. So imagine 15 days of import cover comparison to 11 months right now. Okay. Now composition of foreign reserves are like foreign currency assets, gold, IMF, SDR. These are the things. Okay. So here you can say 701. It's increasing. Mainly foreign currency assets. So you can see major composition is of green, foreign currency. Then remaining is gold. So India has also increased gold. You can see the gold bar is going up. Okay. Now exchange rate and India's exchange rate underlying drivers. So India is one of the fastest growing major economy. Okay, major word is important. Whenever you write answer, write the word major, not just fastest growing economy. हमसे भी ज्यादा फास्ट ग्रो करने वाली है, डबल डिजिट में है, बहुत सारी है. अब जिनके यहाँ कुछ भी नहीं है, थोड़ा सा ग्रो करेंगे, they'll go in. But we are the major economy. Okay? So machinery and capital goods, electronics, energy, again the same thing, with becoming the part of global value chain. Current account deficit is there, but yes, it's still strong. Okay. So we are not going for like strategic or like blanket protection, permanent subsidies. We're not going. We are increasing the scale of the economy. Okay, PM Gati Shakti, etc. Post-modernization. So we can tolerate the rupee unless and until it is not hurting our imports. Gold and energy to add external pressure. So again, you can say sustained demand for gold in India during wedding season and the reserve. That is actually hurting the trade balance. Heavy dependency on energy import. All petroleum almost we are importing. So that is structurally widened CAD. It means we cannot cut the cost. So putting downward pressure on rupee. So gold is becoming costly and still people are importing. That is also affecting rupee. CAD means dependence on capital inflow. So whenever you have current account deficit, you need constant FPI, FDI or debt flows. Okay. So why say people say that this person is helping this one? No, that is the need of the hour. We need. Global interest rates in advanced economies have risen sharply. So you can say now you can connect Fed wala point, hai na? Capital has become scarcer and more competitive. It means attracting capital. If India will attract, India will get capital. India now competes not just with emerging market economies, but advanced economies also trying to retain their capital and not investing in India. So that will all lead to vulnerability in the exchange rate. Now, what are the international investment position? So India, difference between India's overseas financial assets and foreign liabilities. So India remains a net debtor. India means continue in negative international investment position, meaning net debtor to the rest of the world. Net claims to the non-resident declined during this, indicating improvement in India's external balance sheet. So still we are dependent on, the overall thing is a negative. Okay. Fastest growth in overseas asset than liabilities. So India has seen huge amount of foreign assets as well. So residents, foreign assets increase sharply in comparison to the liabilities. Okay. So liability side, inward FDI, loans, currency deposit from non-resident, because this India has to pay. Where rise in foreign assets means where India invested. Okay. Asset to liability ratio improvement. It means assets to liability ratio, which is about 74%, around 77%. So that indicates that India is ability to meet external obligation of using foreign asset is strengthening. It means if suppose, for example, today everyone will ask money from India, India will be able to pay. Okay, asset to liability ratio, which is 77%. Net IIP, IIP to GDP ratio is somewhere around minus this. So here you can say it is again improving. So sustained improvement, balance sheet over time, reducing vulnerability to external shocks. ठीक है, clear है? International investment position. Okay, beta, IIP. Ratio is first, this is the coverage of the asset with the liability. So if India owns 100 rupees, India can cover with assets 77 rupees. Okay, है ना? बाकी और इसके अलावा और कोई रेशो थी नहीं. This is IIP to GDP. It means depending on the GDP. So if GDP is increasing, this ratio is falling, and when the ratio is falling, it shows improvement. Okay, Gargi. This is external debt. Worldwide external debt continue to increase in 2024. So every country is in debt. Advanced economies hold overwhelming share, but emerging market has seen faster growth in debt. So India ranked 21st globally and 11th in G20 in terms of external debt stock at the end of this. So understand a stock and flow concept? Yeah. So despite a rise in absolute debt, India's share in total global external debt remains small, less than 1%. Absolute debt I'm talking about. So highlighting its limited contribution to global indebtedness. Okay. So India's external debt rose about 746 billion by the end of September, up moderately from March 2025. Okay. Yeah, certain things are very repetitive. Chapter bhi aise hi hai beta. When you read the full chapter, all things are almost repetitive. So you can see 5% here, 20% debt to GDP. Yeah. So conclusion. Okay. Now global context is changing. Trade and capital flows are now shaped by geopolitics, industrial policy, strategic concerns. So we are shifting from efficiency to resilience. Okay, that's a big shift. This is like pure efficiency maximization, diversification, redundancy, domestic capability. But India's stance is clear. We'll focus on PLI scheme, we'll focus on defense Indianization, and we'll focus on a semiconductor mission. Okay. Now this chapter is directly connected with chapter number 16, that is strategic resilience. So whatever things I'm saying here, it will be directly connected with chapter number 16. Okay. So India's external sector remains strong, robust. Quality of capital inflow matters. It means we are more focusing on FDI. Export key strength. That is why RBI is getting the rupee to flow. Okay. Policy focus areas, logistics, etc. So Atmanirbhar Bharat, PLI scheme, semiconductor mission, etc. So we are leveraging a strong buffer. What is the buffer? Services export. And what's the buffer? Foreign exchange reserves. The buffer is diversification. These are the things. Okay. Yes, that's why we are attracting FDI. So here, if you just want to understand the whole scenario in simple sense, right now, if you see this economic survey talk about era of fragmented globalization. Fragmented globalization is still there. It means countries are trading. India's external sector strategy must move beyond short term to long term. Okay, like short term current account management will not help, but long term capital account attraction of FDI will help in India getting a strategic position. Okay, we have service exports, we have growing merchandise exports in terms of base in the basket and in terms of diversification in the market. Plus, we have good foreign exchange reserves. So we have near time stability, sustained competitiveness because of depreciation in the rupee. Our exports are still competitive. On the back end, we are making manufacturing depth. है ना? We are providing resilient supply chain. So this time you have seen inflation data is very, very low. And plus, patient capital in India. It means that foreign repatriation of capital from India to abroad is also declining. Okay, so these are essential for currency strength, strategic autonomy. So playing a long game, it's like a test match, is always prioritizing resilience over efficiency, capacity building over dependency. So you can write this line. Playing a long game requires prioritizing resilience over efficiency. Like how resilient you are with the global headwinds. So prioritizing resilience over efficiency and capacity building over dependence. Okay. Okay, so that's it for today's chapter number 4. We'll see you tomorrow with chapter number 5. I hope you enjoyed the lecture. You can write a comment for the chapter for your understanding. So that is important. I'll give you this PPT. You can get this PPT very soon when you request on the number given on the screen. Okay. So that's it for today. I hope you enjoyed. External sector is always fun to learn, fun to understand. Okay. Now, if you have any question answer, you can connect with me. You can ask in the chat box.